Hi everyone, welcome back to my channel Achieving Alpha and welcome back to another episode of post market analysis for today, that is 25th of March 2021, where we saw crazy volatility in the markets today. And today's monthly expiry was one of the most volatile expiries that I have seen in the last 2 to 3 months. So without further ado, let's have a look at the daily chart for Nifty and Bank Nifty. So surprisingly, Nifty also broke the monthly low today. So yesterday only Bank Nifty had broke the low for the month, but interestingly Nifty also broke the low for the month and it closed below that. So that's not a very healthy sign. And the index was pretty volatile. This one single candle cannot demonstrate, but when we look at the intraday charts, we'll see what sort of crazy movement we saw on both sides. Let's have a look at Bank Nifty. So if I show you the daily time frame chart of Bank Nifty, so again this was crazily volatile today, and as mentioned that we will be testing 33,000 once we close below 35,000, which we did, and in fact we also broke 32,500 at one point in the day, which was really crazy. But yeah, again here also we saw movement on both sides, something which we'll see soon. But before that I need to show you the advanced decline ratio. So today less than 400 stocks were advancing and more than 1500 stocks were declining, and this is a sort of a crazy ratio. And even in Nifty 50, if we see the top gainers, only Tata Steel was gaining over a 2%, and the rest of them were minor gains. And if we talk about the Nifty 50 losers, so we'll see that IOC was the stock which was losing the most, followed by Maruti and then Coal India, Bharti Airtel and Hindustan Unilever. If I talk about the index movers, so Reliance has been contributing to the fall since a lot many days, and in fact it has shown a very weak closing as on date. Also the banks, primarily HDFC Bank and Kotak Bank, are also contributing to the fall, and HDFC Bank having a good weightage in Nifty is resulting Nifty to go down day by day. And as I mentioned that once we close below 14,450, which we have today, so we can expect 14,000 in the short run as well, because 14,450 was a very strong support, and a closing below that clearly demonstrates that there's going to be weakness in times to come. So let's have a look at the intraday charts now. So this is the intraday chart for Nifty. We opened up flat and you can see that within the first 5 minutes what a drastic fall did we show. And if I show you the volume was also good throughout the day, and that was the reason that we saw moves on both the sides. So there was some selling pressure since the start of the day, and I had warned in a post that it's not a good idea to short once Nifty was below 14,400, because that was the support zone. Nifty could have bounced back from there, but after 14,400 the next support was at 14,275, and you can see that pinpoint from that particular support the bounce was there. And now some of you might be asking that why this bounce was there if it had to fall back eventually. One of the things that we need to understand is that markets cannot fall in one straight line, because whenever something is trading, let it be index or any particular stock or any particular instrument, there has to be a buyer and there has to be a seller. If someone keeps on selling, we also need someone who buys, and this particular move was for that. The institutions, particularly the foreign institutions, have bought heavily over the last 3 months, and they cannot just keep selling. If they are selling, they also need some buyers, and this particular move is what is called a sell on rise market. This move was basically to trap people, and then you can see that the institutions, after pulling the market up till this point, just sold off and just dumped the quantity here, and you can see that the retail investor was the one who got excited, who bought here, and then it got trapped. So similar was the case with Bank Nifty. So if I show you the intraday chart for Bank Nifty, the first 5 minutes were extremely bearish after giving a flat opening, and I had already given you this one particular resistance which was 33,418. The market opened exactly at that point, and since then we have witnessed a one-way fall. And again, these resistances was something that I had mentioned in yesterday's post-market analysis. So if you had taken a note, I am sure that this would have been really helpful. And after that, again you can see that this was a trap move, and straight from 32,553 to 33,500 within a span of half an hour, Bank Nifty was pulled up about 1000 points and then it was again dumped. So this is the kind of trap these are set by institutions and operators and these are basically to trap the retail investors, and that's really not good. But that's how it is, so you need to be careful, and on days like this you need to keep your stop losses intact. I am pretty sure that the people would have done option selling today would have lost some good amount of money, and I'm including myself here, because option selling is something which can be really crazy in this type of markets where the volatility is seen on both sides, and these are crazy moves. 1,000 points move on each side could be really hard to manage. So it's okay, it's part of the game, and there are days when option selling is just not meant for. So this was one such day. Let's talk about the option chain analysis. So we are looking at the next expiry option chain, that is the option chain for the 1st of April expiry. Again, there is not a lot of build up, so probably in a day or two we'll see some more OI build up and we can make more crisp conclusions after that. But till then, let's have a look at this. So on Bank Nifty, again the highest open interest, which is merely of a 3 lakh contract, still resides on 32,000. I'm again repeating that this might not be a good way to analyze because there is very less data in this particular option chain, but just for the sake of doing it, we are doing this. So 32,000, again you can see that has the highest OI. This should act as a strong support, because today also we took some good support from 32,450 and then we bounced back. But again the markets are weak and there is no second thought about it. So on the call side, we can see that the highest OI is now on 34,000, which is a little bit surprising because the last week it was at 35,000, but now 34,000 seems like a really big challenging resistance for Bank Nifty to break. So let's see how do we do, and probably in a couple of days we'll see some more OI build up and that will make things clear. If I talk about the option chain for Nifty, so in Nifty we'll see that the highest OI on the put side is still at 14,000, which happens to be a strong support. Again, in a couple of days we'll see that where is the highest OI created, and then we can probably infer the strong support and resistances. On the call side, again 15,000 has the highest open interest, and 15,000 has become a really important resistance this time, because you will see that on every multiples of 100 we'll find that the call writers have become really active, and there is no second thought about it that the bears have taken control of the markets from here on. And as I mentioned that since we have closed below 14,450, we should expect 14,000 in the days to come. So that shouldn't be a surprise. With that being said, let's go to the next segment, which is the global cues. So let's have a look at the global cues, and we'll see some immense selling in the world markets, including US futures and European futures. So DAX, which was struggling to go above 14,600, and I mentioned that if we close below 14,600, which we did yesterday, then we will see some intense fall, and that's what we have seen. So the DAX is currently trading even below 14,500, and that's not a very healthy sign. The CAC has slid below 5,900, which is again not a very healthy sign. And FTSE, which was struggling to trade above 6650, has now even slid below 6600, which is not a very good sign. The Dow was trading comfortably at around 32,600 in the morning, but we have even broke everything and we are now trading below 32,200, which is not a very good sign. And if we close below 32,000 today, then we can expect that the global markets have also turned bearish in the short term. The S&P is again trading below 3900, which is not a very good sign. And yesterday itself, Nasdaq was trading above 13,200, and now it has even slid below 12,800, which is not a very good sign. So the markets overall look bearish, and the global cues are also supporting to the fall of Nifty, and they will probably support to the fall of Nifty because we had our own problems. The COVID cases were rising, the bond yields were surging, and now even the global markets will support our fall. So that's not a very good news for us. The bond yield though has cooled off, but again till the time we are above 1.60, that is a concern situation. And with the stock markets falling, maybe the bond yields could rise because there is an inverse correlation in the both, but there is no guarantee again. Talking about the commodities, so again the commodities are also falling, and there is a bearish sentiment overall in every asset class that we can see as of now. So gold has seen a minor fall of about 0.35%. Silver has seen some heavy profit booking with a fall of over a 2.5%. So that's not a very good sign. So let's go and talk about the last segment of our post-market analysis, which are long-term investment opportunities. So in today's falling market, one of the best stocks that you can consider for long-term investment is Muthoot Finance. Now I have talked about this stock multiple times on my channel prior to that, but I really think that at this particular price point, the valuation of the stock becomes really attractive, and this can be a really good long-term bet for you. So the stock not many time ago was trading above 1300, and since then it has been correcting. So there was some bad news, which was the sudden demise of their MD and chairman, Mr. MG George Muthoot. But after that, the gold prices also tumbled, and that was the reason that the stock has seen immense selling pressure since that time. And the stock has even broke 1200, which was an important support of the stock. But 1150 is another very strong support for this particular stock. And if I show you the delivery percentages for today, so today you will see that there has been a delivery of over 32%, which I consider it to be a decent, not very strong, not very weak either. In the last 2 weeks, we have again seen some decent delivery in this particular stock, but I can say this with confidence that without a doubt, this can be a really good long-term bet for your portfolio. So in 1 month, as I mentioned, that the stock has been correcting, and it has corrected over 6.5%. In 1 year, the stock has still remained intact and given you returns of over 97%, which is really great. In 5 years, the stock has provided you returns of more than 582%, which is really awesome. The business fundamentals are really good. The management is still strong, although the demise of the MD and the chairman cannot be compensated. But I think the management will still do a good job. And the best part about it is the business model and the fundamentals of this particular company. So you can certainly consider long-term investment in this particular stock. And I personally think that it is available at a really good valuation at the moment. And just a disclaimer that I personally hold this particular stock in my long-term portfolio. So just letting you guys know. So yeah, I guess this is it for the post-market analysis for today. I hope you liked this particular video. If you did, please consider pressing the like button. And if you are new here and coming for the first time, subscribe to this channel for more such content. Thank you so much for watching till the end. Have a good day and take care. Bye bye.